My name's Washboardjim with a sneaky snake trading strategy where I like to talk about chart patterns, moving averages, and being in the now. And this morning we watched a huge knife go on, and I want to point out a snake with a megaphone pattern and how I kind of traded it today. Kind of help you out. So we got a big old long sell-off this morning. It hit my support that I had, and we had a little bounce up to the 63 EMA. And then it pulled back again. So we had this huge long snake that came into play. Big old sell-off from 86.30 all the way down to 87.10. Well, there's a couple things in here that could catch your eye when you're following a trade like this. And we had the big sell-off. Kind of like a downward megaphone almost, but you could draw it into a snake. So I got into two different calls. I got in the 67.70s and scalped them up, and then I got in the 67.50s and scalped them up down at the bottom. And I want to point out what got me in the trade. And then we had a pullback, and we had a couple patterns show up. So pretty early in the trade, I started noticing a megaphone pattern that looked real bearish. It started looking real bearish because it held below the pivot point area inside of a megaphone, which is an expansion pattern. That's when you have higher highs and lower lows. Then you had the big sell-off that came down. And we're going to draw in the little candle. I'm going to clean this up. I want to see where I got this resistance here first. And then we have the /ES sitting next to it. Sometimes I'll be watching this, looking for an exit idea to get out of the SPX or the SPY. And I just picked this up last year from one of our members in the room that really, I've always known about the /ES, but I've never used it as a tool when trading the SPX. And it's eventually come in very handy because I can't get the VWAP on the SPX, only the SPY. So I use the /ES VWAP for a resistance level to maybe get out of the trade or to scale out of a trade. And I use the moving averages to stay in the trade or to catch some bullish patterns, and I also use the candlesticks. And I use chart patterns. So we had a sell-off here, and we're going to clean this up. First I want to pull up the SPX. I want to look where I got that trend line from. It was a pivot point area on the chart. It was part of this gap play. We had a gap right in here. So that's more like a pivot point perspective of where the trade's going to be, and that's on the 1 hour time frame. We had these 4 big hourly candles that came down and supported that next gap right down here, or that next support level. So I'm going to clean this up. That's a pivot point. So if we stay above that resistance level, that pivot point, you see where we pulled back right here first thing this morning. That's probably where I got that line from, with co-injunction to the 1 hour 20-day time frame. So we're going to clean this up. And I'm going to draw the snake that comes out of this here channel. Snake is just a knife. Take it to the body of that next candle, this right here. And it's right there. So once this starts to break out of that channel, that gets my attention. And I always say look for a pattern or look for something that maybe would cause this stock to go ahead and break out. And here you could see where we had the support channel right here, had the big long snake coming down, almost like a fallen wedge, and it broke out too. So this is the SPX. So when it breaks out, you don't want to chase the stock. You want to let it pull back and create some kind of pattern going sideways. So once we started breaking out of that pattern, we started showing a megaphone pattern. So you got your little megaphone pattern. Then inside this we had the double bottom. So that's when I called this trade out. We ran up, hit the 200 and pulled back down again. Then it created a two-headed snake where you have an inverse head and shoulders. Still kind of showing that megaphone scene. Then it jumped up for the 1, 2, 3. And after we had the 1, 2, 3, which is another trading strategy that I go with. If you can't count to 3, if you can count to 3, you can trade with me. So it broke out of that pattern right there, and then it started doing it again. We had another little megaphone right in here where it started breaking out. So we had the higher highs and the lower lows. Using the VWAP over here was my target. So we hit the 200 EMA and bounced above the 63, and we had a crossover between the 63 and the 200 to where it run up to the VWAP. And here we had the 9 crossing on each one of these jumps, where the 9 crosses the 21. So anytime the stock's below the 9, you're bearish, but once it breaks above the 9, then you become bullish. And that's another way to trade this stock right here. So you could have either got out, scaled out at the triple top at the 200 EMA, and then got back in it off the 63 and then run it back up again. So my last trade was 275 on the 67.50s, and it ran all the way up to $12, and I got out at 1,000. And I scaled out 7 contracts before I even got that far. I was up 100%, and I went ahead and scaled out and sold them and kept 2. So when I'm calling these bottoms, I like to go ahead and stay in there and see at least 1 or 2 contracts. I don't do it all the time because I scalp about 5 or 6 times a day, and that helps me get my average that I need for that day. But that's just one way of calling it out. So again, you had the big long snake. It breaks out. It catches your attention. You're looking for the pattern to come out. And here we had a megaphone. Where it come up, and that's when I started noticing that megaphone with the higher highs and the lower lows. And that's it. That's called the sneaky snake trading strategy, where I talk about chart patterns, moving averages, and being in the now. And put a chart next to it where you can watch that VWAP, and that gives you some kind of idea when you want to get out of the trade like I did here. Once it hit that VWAP, they were almost at 1,000. They were at $1,000, $10. And then it ran all the way up to 12 after it broke out. It took 3 different times to break that VWAP. 1, 2, triple top, boom. Then it came back and retested. That's what you got to get used to, is not chase. Let it come back and retest the previous resistance. And that's what it did right here on that VWAP. And then it ran up. And you exit the trade. So right now we pulled back to the 200. And you got to look at the clock. We're about 6 minutes to power hour. So that's when things start to get a little bit volatile. And we are in a bear market right now. The fat cats have been trying to tell you that for a couple weeks. Actually, they've been saying it for a long time, calling a bubble and I didn't feel like we were in a bubble. I still don't feel like we're in a bubble. But the big institutions, Goldman Sachs, JP Morgan, all them big guys are saying, they want this market to pull back so they can buy the dip into Christmas. A lot of them have missed the run. Buffett, months ago, got out of his trades. Then you got Leon Cooperman, who only made 17% this year, say we were in a huge bubble. And then you got some guy named Curry or Hurry comes out with hundreds of millions of dollars short in the market. So they've been telling us, they've been pre-warning us, and you can tell by the volatility. And retail traders are trying to outsmart them. They're fundamental traders. We're technical traders. Everybody I know trades off charts. They don't trade off fundamentals. Almost everybody. The hundreds of traders that I know hardly ever talk about the fundamentals. But they talk about them all the time. Earnings per share and 6 times. We're up 100 like they did PLTR. It was up 4,000% from 3 years ago. So these stocks, they've just had one heck of a run during the Trump administration. I think we're going to have more, but it never hurts to have a 10% correction in the market, and some are even calling 20. So just be careful. This is one way of catching knives. Wait for that breakout, and then when that breakout happens, wait for that pattern to form. You might have an ascending triangle. You might have a fallen wedge. You might have inverse head and shoulders, which I see a lot of. You might have triple bottoms. You might have double bottoms. Whatever pattern shows up is the one that you want to play. You could even have a descending flag, which is bearish, but still could bounce up, as long as it pulls out of that snake, out of that knife. You could have a symmetrical flag, which could go either way, but in most cases, when you have a huge sell-off like this, you're going to have a this in here is almost an ascending triangle, almost. You could almost call it an ascending triangle, but you can also almost call it an inverse head and shoulders, from right down here to there. But in this case, I called it a megaphone. And then when it had that third dip on that megaphone, I went ahead and I took the trade at 275, and I raised up the option price closer to the money. Because by this time, the original one that I was in had fallen so far down that I wanted to make better money, might spend a little bit more, but the odds of making more money on something like that are a lot higher. So this is a sneaky snake trading strategy where I talk about chart patterns, moving averages, and being in the now. And have a great day.